Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Doubts grow over Central African Republic's meme coin amid deepfake and scam allegations. Metaplanet becomes Japan's fastest rising stock, surging 3,600% on Bitcoin pivot. Ethereum ETFs outpace Bitcoin counterparts in weekly inflows amid Trump's trade war. Russia's communications regulator blocks country's largest crypto OTC aggregator. University of Austin establishes $5 million Bitcoin investment fund for long-term growth. Doubts grow over Central African Republic's meme coin amid deepfake and scam allegations. The rapid rise of the CAR token has drawn significant attention, but deepfake concerns, website suspensions, and suspicious domain registrations have sparked skepticism over whether this is truly a government-backed initiative. CAR meme coin's unexpected launch. On February 10, the Central African Republic, CAR, surprised the crypto world by unveiling its own meme coin, dubbed CAR. The announcement was made through the official X, formerly Twitter, account of President Faustin Touadéra, who described the project as an initiative aimed at fostering unity, supporting national development, and putting the country on the global map. Today, we are launching $CAR, an experiment designed to show how something as simple as a meme can unite people, support national development, and put the Central African Republic on the world stage in a unique way, read the president's post on X. Touadéra also tied this initiative to the country's history of crypto adoption, highlighting that he was the second world leader to officially recognize Bitcoin as legal tender. The CAR token was launched on the Solana-based Pump.Fund platform, receiving overwhelming market interest. Within hours, its valuation skyrocketed as traders rushed to participate in what was being labeled the first-ever government-sponsored meme coin. Red flags emerge. Despite the enthusiasm surrounding the project, doubts arose quickly. Within hours of the announcement, concerns regarding deepfake manipulation, website suspensions, and irregular domain registrations cast a shadow over the legitimacy of the initiative. AI deepfake concerns. Skepticism surged after artificial intelligence detection tools analyzed the president's video announcement. One widely used AI detection model, Seferbikov, assigned an 82% probability that the video was AI-generated. Another model, Ensemble, also flagged it as potentially manipulated. However, conflicting results came from Avatrify and Deepware, which found no clear signs of deepfake alterations. Mysterious website takedown. Adding to the controversy, the official X account created to provide updates on the CAR meme coin was abruptly suspended without explanation. Shortly afterward, the president's X account acknowledged the issue, stating that efforts were underway to restore the suspended page. Meanwhile, blockchain researcher Yokai Ryujin, founder of Unrevealed XYZ, pointed out inconsistencies in the project's website domain registration. He noted that the car.meme domain was registered via Namecheap, a low-cost domain provider, only 3 days before the announcement. Ryujin argued that such a move was highly unusual for a government-backed project, raising further suspicions. Shortly after his findings were shared, Namecheap took action and suspended the website, confirming that it had been flagged as an abusive service. Ryujin, who had issued warnings about the project early on, posted on X that the takedown validated concerns. "I tried to warn you from the start, and I'll keep fighting for you," he wrote, urging the crypto community to remain vigilant. Market response and volatility. Despite the growing controversy, the CAR token experienced a meteoric rise upon launch, briefly reaching a peak valuation of $527 million. However, by the evening of February 10, the token's value had retraced to $460 million. The situation unfolds at a time when fraudulent meme coin launches have been on the rise. Just days ago, scammers compromised the ex-accounts of former Malaysian Prime Minister Mahathir Mohamad and Solana DEX aggregator Jupiter to promote deceptive meme coins. The similarities in execution, unexpected endorsements by high-profile figures, rapid website removals, and sudden social media suspensions have led many to question whether CAR is a legitimate government initiative or yet another large-scale scam. As of now, no conclusive evidence confirms whether the CAR meme coin is officially backed by the Central African Republic's government or if it is an elaborate deception. Crypto.news continues to monitor the situation and will provide updates as more details emerge. Metaplanet becomes Japan's fastest rising stock, surging 3,600% on Bitcoin pivot. Metaplanet Incorporated has emerged as Japan's hottest stock, skyrocketing by over 3,600% in the past year following its strategic shift toward Bitcoin. With a current holding of 1,762 BTC and an ambitious goal to accumulate 21,000 BTC, the company has positioned itself as Asia's premier Bitcoin-focused equity play. Metaplanet's transformation and Bitcoin strategy. Originally a hotel development company, Metaplanet pivoted to a Bitcoin-first business model in early 2024 after the economic fallout from the COVID-19 pandemic forced it to shut down most of its properties. This shift has propelled the firm's stock to unprecedented levels, making it the best-performing Japanese equity and drawing significant attention from both retail and institutional investors. The surge aligns with a broader global shift in market sentiment, as Bitcoin reached an all-time high of $109,000 on January 20, the day of U.S. President Donald Trump's inauguration. While Bitcoin has since retraced, trading at $97,000 as of February 10, Metaplanet's stock has continued to climb, underscoring growing investor confidence in Bitcoin's long-term value. Metaplanet's approach has drawn comparisons to Strategy, formerly MicroStrategy, the American firm that holds over $45 billion in Bitcoin. CEO Simon Jerovich, a former Goldman Sachs equity derivatives trader, has openly embraced a similar strategy, positioning Metaplanet as Japan's leading Bitcoin proxy. Expanding Bitcoin holdings and growth plans. Metaplanet's transformation has triggered a surge in investor interest, with its shareholder base increasing by 500% in 2024 to nearly 50,000 investors, according to company data. Although some institutional investors, such as Capital Group, which also holds shares in Strategy, have taken positions, the majority of Metaplanet's investors are retail traders. Many of these investors are relatively new to cryptocurrency markets, drawn in by Japan's Nippon Individual Savings Account (NISA) program, which was introduced in early 2024. The program encourages long-term investment by allowing Japanese citizens to invest in stocks tax-free, making Metaplanet an appealing alternative to direct Bitcoin ownership, which incurs capital gains taxes as high as 55%. As of the latest available data, Metaplanet holds 1,762 Bitcoin, valued at approximately $171 million. However, the company has set an ambitious goal of increasing its holdings to 10,000 BTC by the end of 2025 and 21,000 BTC by 2026. To finance this expansion, Metaplanet plans to issue 21 million new shares, aiming to raise around $750 million. If successful, this would mark the largest Bitcoin-driven equity capital raise in Asia to date. Beyond Bitcoin, the evolution of Metaplanet's business model. In addition to accumulating Bitcoin, Metaplanet is working to integrate its remaining hotel assets into its evolving crypto-centric brand. Later this year, it plans to rebrand its last operating hotel, the Royal Oak in Tokyo's Gotanda district, as the Bitcoin Hotel. The revamped property will serve as a hub for Bitcoin-related events, including investor summits and educational seminars, further aligning with Metaplanet's efforts to cement its place in Japan's growing cryptocurrency economy. Risks and market challenges. Despite its impressive growth trajectory, Metaplanet faces potential risks. The company has posted 6 consecutive years of losses but is expected to report a profit in its upcoming Q4 earnings report. However, analysts caution that the firm's valuation remains highly dependent on Bitcoin's price. A sharp decline in Bitcoin's market value could trigger a major pullback in Metaplanet's stock, posing risks for investors who have ridden the wave of its rapid ascent. For now, Metaplanet continues to dominate headlines as Japan's top-performing stock, setting the stage for what could be a historic expansion into the Bitcoin investment space. Ethereum ETFs outpace Bitcoin counterparts in weekly inflows amid Trump's trade war. Spot Ethereum exchange-traded funds, ETFs, in the US have witnessed a significant surge in investor interest, recording more than double the net inflows of Bitcoin ETFs over the past week. This shift comes amid heightened macroeconomic uncertainty stemming from President Donald Trump's recently imposed tariffs. Ethereum ETFs lead the market. According to data from SoSoValue, the 9 spot Ethereum ETFs collectively recorded $420.06 million in net inflows over the past week, marking the first time Ethereum investment products have outperformed their Bitcoin counterparts in terms of weekly inflows. Ethereum ETFs saw a steady influx of capital throughout the week. On Monday, inflows reached $83.54 million, but the real momentum kicked in on Tuesday, when net inflows skyrocketed to $307.77 million. This surge coincided with a viral post by Eric Trump stating, "It's a great time to add ETH." Following his post, Ethereum's price surged more than 35%, climbing from approximately $2,300 to over $2,900 within a single day. The rally continued with a more modest $18.1 million inflow on Wednesday and $10.7 million on Thursday. However, by Friday, none of the 9 Ethereum ETFs recorded any activity, closing the day with 0 net inflows. Why are investors choosing Ethereum over Bitcoin? Analysts at Coinbase suggest that the recent surge in Ethereum ETF inflows may be linked to increased interest in ETH CME basis trading over Bitcoin. This strategy involves simultaneously going long on spot Ethereum while shorting Ethereum futures to capitalize on price discrepancies. Last week, this trade offered returns of 16%, compared to Bitcoin's 10%, which may explain why institutions are favoring Ethereum for short-term investment plays. As of the latest data, total net inflows into Ethereum spot ETFs have reached $3.18 billion, reinforcing ETH's growing appeal among institutional investors. At press time, Ethereum, ETH, was trading at $2,646, down 0.6% for the day. Bitcoin ETFs see mixed performance amid tariff uncertainty. Meanwhile, the 12-spot Bitcoin ETFs had a volatile week, reflecting investor unease over U.S. trade policies. On Monday, the first trading day after new tariffs were imposed on China, Mexico, and Canada, Bitcoin ETFs saw a sharp outflow of $234.5 million. The selling pressure continued on Thursday, with another $140.3 million withdrawn from Bitcoin-focused investment products. Despite these outflows, inflows on Tuesday, $340.82 million, Wednesday, $66.38 million, and Friday, $171.19 million, helped stabilize overall performance. By the end of the week, Bitcoin ETFs recorded $203.5 million in net inflows, a significant 63% decline compared to the $559.8 million recorded the previous week. At press time, Bitcoin, BTC, was up 4.6% over the past 7 days, trading at $97,150. Market outlook. With Ethereum ETFs now consistently attracting institutional capital, analysts are watching to see if this trend continues in the coming weeks. If macroeconomic concerns persist and CME basis trading remains lucrative, Ethereum's position as the preferred institutional crypto asset may strengthen further. Meanwhile, Bitcoin remains the dominant force in the crypto market, but its ETF performance may face continued headwinds amid ongoing trade tensions and regulatory uncertainty. Russia's communications regulator blocks country's largest crypto OTC aggregator. Roskomnadzor, Russia's state communications watchdog, has officially blocked access to BestChange, the nation's largest cryptocurrency over-the-counter, OTC, aggregator. As of the latest update, the regulatory body has not provided an official explanation for the move. However, BestChange's website has been added to the country's list of restricted online platforms, preventing Russian users from accessing the service. Legal response and background on BestChange. A representative from BestChange confirmed that the platform's legal team is already working to restore access. However, they refrained from disclosing specific details regarding the cause of the latest restriction. BestChange, established in 2007, is one of the longest-running and most widely used OTC crypto platforms in Eastern Europe and Russia. It provides an aggregator service, allowing users to compare exchange rates across various peer-to-peer, P2P, and OTC platforms. This is not the first time BestChange has been blocked in Russia. In 2017, a St. Petersburg court issued a ruling against the platform, labeling Bitcoin a monetary surrogate and citing blockchain's irreversible transactions as a key enforcement challenge. The ruling was overturned in 2018, allowing BestChange to resume operations. However, in 2019, Roskomnadzor blocked the platform once again, only to lift the restriction after a few months. Now, the latest ban has raised concerns among crypto users in Russia, as it follows broader regulatory crackdowns on digital asset services. New crypto restrictions and their impact. This ban comes nearly 6 months after Russia enacted a sweeping new law targeting Bitcoin mining and cryptocurrency advertisements. The legislation prohibits digital asset advertisements and restricts services that facilitate cryptocurrency transfers within Russian infrastructure. As a result, platforms like BestChange, which connect users to various OTC trading services, appear to be directly affected. Following the introduction of the new law, Russia's largest search engine, Yandex, swiftly updated its advertising policies to align with the regulations. Yandex's revised policies now prohibit promotions for cryptocurrency exchanges, advertisements related to smart contracts, marketing for mining services, initial coin offering (ICO) campaigns, services that track wallets for anti-money laundering purposes. The broader implications for Russia's crypto market. The repeated blocking of best change highlights Russia's tightening stance on cryptocurrency-related services. While the country has not outright banned crypto trading, it has imposed increasing restrictions on platforms that facilitate access to digital assets. The move also comes amid ongoing discussions within the Russian government about regulating cryptocurrency in a way that aligns with national interests. While some factions advocate for greater control over crypto-related activities, others recognize the potential benefits of blockchain technology and digital finance. For now, Russian crypto users face growing limitations in accessing OTC platforms, exchanges, and other essential services, raising questions about the future of digital asset trading within the country. Best Change's legal team is actively working to challenge the ban, but whether the platform will be reinstated, like in previous instances, remains uncertain. University of Austin establishes $5 million Bitcoin investment fund for long-term growth. The University of Austin has announced the launch of a dedicated Bitcoin investment fund, positioning itself as a pioneer among U.S. universities exploring digital assets as part of their endowment strategy. According to a Financial Times report, the 142-year-old institution is allocating $5 million from its $200 million endowment toward Bitcoin, making it the first university endowment in the U.S. to create a standalone Bitcoin investment initiative. A long-term commitment to Bitcoin. University endowments are pools of donated funds invested to generate sustainable returns, typically used to support scholarships, operational expenses, and research. The University of Austin's Bitcoin Fund is structured as a long-term investment, with plans to hold Bitcoin for at least 5 years. Chad Thevenot, Senior Vice President for Advancement at the university, emphasized the institution's perspective on Bitcoin's value, stating, "We view Bitcoin as a long-term asset, similar to stocks or real estate." Originally announced in May 2024, the initiative was publicly revealed after the University of Austin partnered with Bitcoin financial services firm Unchained, which will provide custody solutions for the university's Bitcoin holdings. Universities increasingly exploring Bitcoin. While the University of Austin is the first to launch a Bitcoin-exclusive endowment fund, it is not the only university embracing cryptocurrency as part of its investment strategy. In October 2023, Emory University in Georgia became the first U.S. college endowment to gain exposure to Bitcoin. The university disclosed a $15.1 million investment in Grayscale's Bitcoin Mini Trust in SEC filing. Before that, Stanford University's Blythe Fund allocated 7% of its portfolio to Bitcoin. In March 2024, the Stanford Blockchain Club proposed an investment in BlackRock's iShares Bitcoin ETF, leading the student-run fund to acquire Bitcoin at $45,000 per coin. The growing presence of Bitcoin in university endowments suggests that higher education institutions are increasingly recognizing its potential as a long-term asset. With the University of Austin taking this bold step, Other institutions may soon follow, incorporating Bitcoin into their investment strategies to diversify portfolios and capitalize on the evolving digital asset economy.